For the third quarter. The stock, of course, is not doing particularly well in a market that is quite boisterous at the end of the trading week. You have the third quarter profit of Raymond, which in fact nearly doubled to 185 crore rupees, and you had the top line, which grew about 10% to just under 2,400 crore rupees on a consolidated basis. I spoke with Amit Agarwal, who's the Group Chief Financial Officer of the company, a short while back, and I began by asking him about the breakdown of the numbers and what led to the operational performance. Listen in.
This is the 10th consecutive quarter where we have demonstrated a very strong performance consecutively, and this quarter once again has been a record quarter with delivering 426 crores of EBITDA and almost doubling the net profit, as you rightly pointed. I think two or three big highlights. If I talk about our lifestyle business, which is the larger piece of the business group, where we have seen in the first half of the quarter, that is till Diwali time, a decent amount of demand. But post that, we were expecting a stronger demand for the wedding season, which did not pan out exactly. But because of our own inherent strengths of the brand and the whole strategy which we have put in place for our branded apparels, we have seen a 20% growth compared to the last year. And I think this is clearly reflective because we opened in the last 12 months more than 200 stores, which actually what happens is whatever you see, that is the only what you buy. So to that extent, I think our store opening strategy has worked out very well. And we plan to also open more than 500 stores in the next 3 years. Secondly, if I look at it, our Ethnics by Raymond, which is being commonly used for the weddings, festivities and such things, we have opened 100th store, which is a milestone achievement also in this quarter. I think that is also helping. Second thing, as we talk about the real estate side of the story, I think there we have seen a jump in our revenue by more than 50%. And I think that is significant because of two things. One, our faster pace of construction and the booking pace enables us to deliver such kind of a phenomenal revenue increase. And I think overall, every business, in spite of a challenging conditions, we have been able to grow the business in spite of having difficulties, headwinds in terms of different consumer demand and so on and so forth.
Understood. In terms of the number of stores that you are opening, I'm just curious about the makeup of this, because you have made-to-measure stores, as I understand it, and also stores that sell ready-made garments. Where are you seeing more traction?
Yeah, so let me give you the brief perspective which kind of stores we have. We have got three formats of stores. One is called the Raymond shop, which is typically selling the fabrics as well as apparels, which are the over 1,000 stores spread over 600 cities in India. So these are primarily the franchisee-led business. Second thing, we have got the EBOs for the five iconic brands, which is the Park Avenue, Raymond Ready to Wear, Color Plus, as well as the Ethnics by Raymond. So these are the big brands under which you have the EBOs, exclusive outlets where you see only these products, which have the larger range and so on and so forth. And the third piece is obviously the large dealer distribution network where the MBOs are happening, which caters to all sorts of segment as well as keeps all products, including of competition. There also we have seen a growth. However, when we talk about 200 stores, primarily in the EBO space, which is led for the Ethnics by Raymond, as well as for the 4 brands which sell our apparel brands. We have opened some of the TRS stores also, but TRS stores have got a decent reach. I think the reach which we need to expand is primarily on the apparel side.
Okay, and on the garment side, and of course on the textile side, I'm just trying to understand in terms of capacity utilization, because as you pointed out, things are going reasonably well. Would you have to bolster that in any way, or are you're comfortable? And the reason I ask is because you've gone net debt free in the quarters gone by. I would think that most of your capex is done, and you've added significant stores. So what is the plan going forward in the rest of the year and also heading into the new year?
Yeah, no, absolutely. So in terms of our manufacturing capacity, you see for the suiting fabric and the shirting fabric, I think we have an adequate capacity, though we run a high utilization. But I think the uniqueness which Raymond has is the ability to finish the product in a very nice manner. For example, that it is a resistant to water or stain free and such kind of things. I think that is comes by due to our finishing. So we have the ability to source the raw fabric, which is the gray fabric, from the market and finish it. So to that extent, there is not large capex required on that area. However, what we are investing right now is almost 200 crores in enhancing our garmenting capacity, which is primarily used for the export business. All the big brands, you take it, they buy from us. Whoever sells the product, they are consistently buying from us. And it is a larger business, almost 1100 crore. Yearly, we target the revenue to deliver in that business. And that is where, because of China Plus One and the big boost on the textile policy exports, I think we are getting the benefit of that. Third thing, what we have also done, if you see based on the free cash flows which we are generating, all our businesses are generating free cash flow. We have liquidity available. We have invested in our engineering business and acquired a business of Mining Precision, a large stake in Mining Precision business, which are typically in aerospace, defense, electric vehicle components, as well as in auto components. So to that extent, that's a very fast sunrise growth sector, and that is place where we have done the acquisition. But our focus continues to be remain as a debt-free business, and we are sitting as a group with 1,300 crore cash. So we will continue to invest behind the brands. We will continue to invest behind the store expansion and take the business to a higher level.
Okay. Last question has to do with the margins, and you've seen expansion in the quarter gone by 15%, and that seems to be driven by not just, of course, but seems to be driven by sanguine situation with regard to raw materials. That seems to be coming off. Is that the right understanding, and what is the expectation in the remainder of the financial year?
Yeah, I think so. Raw material helps. However, our whole focus of the cost rationalization and cost consciousness and changing the product mix. For example, in the branded apparel, if you see the growth in the revenue has come, which helps us in operating leverage and operational efficiency comes by. The two or three things. One, we are moving to a premiumization, and at the same breath, we are also moving on to the casualization. Because otherwise, our brands were reflective of mainly as a formal brands when you go to an office and such things. However, today there's a lot more in the casual section. So that is what is also helping us to improve our full price sale through. So that is one area where we believe is a good achievement we have seen. Second thing, if you see in the margin improvement, we are also seeing in the garmenting business, across our businesses, even in the suitings business, I think we have seen an improvement in the margins, because sometimes you have the ability to tweak a mix here and there. It is not just a price led. What we are focused is on the volume led as well as improving the quality of the mix.
Okay, but 15% par for the course going forward as well?
Yeah, same.
Fantastic. Thank you so much, Amit, for joining in and for giving us that perspective. Pleasure speaking with you as always.
Thank you.
All right. Now, as we speak, you have the benchmark index that's trading at very close to the high point of the day, 22,100. And remember, 22,097, I believe, was the closing high. We have breached that. So if we hold on to that mark, we are in uncharted territory, so to speak. 1.9%, over 400 points in one trading session. Let's see if that strength continues into the second half of the session as well. We have to slip into a very quick break. There's more on the other side, so do stay tuned. Welcome back. Now, while we were in the break, in fact, you had the Nifty 50 hit a fresh intraday life high of 22,126.8. Remember, the closing high is just under that 22,100 mark, and in all probability, there's going to be quite the challenge to that record close. Of course, you have a few stocks that are gaining quite substantially in trade and that are leading to the strength for the benchmark index, not least of which is Reliance Industries, which is up over 3% at this juncture. And in fact, let's look at some of the key contributors for the Nifty 50 as well, if we can pull that chart up. What you will see right on the top of the screen is the likes of Infosys, which is gaining ground. You have ICICI Bank and TCS. In fact, the entire IT pack doing particularly well in trade today. What are the factors that are leading to this then? And because there is strength in the broader markets as well, perhaps not to the extent of what you're seeing on the benchmark index, but you have the mid-cap index as well as the small-cap index that are currently trading with gains of over 1% or 1% or thereabouts. And all of the sectoral indices are currently trading in the green. The likes of the PSU banking index has gained quite substantially, of course, in trade yesterday as well. It was one of the key outperformers, but Bank of India as well as Punjab National Bank, IOB, UBI, all gaining ground. Remember, one of the thrusts of the interim budget was on the housing program in the rural segment. You have the Pradhan Mantri Awas Yojana Grameen, for which the finance minister spoke about the target of 3 crore, which is currently underway, being very close to completion. But she also laid out the plan for the next 5 years, where she said 2 crore additional houses would be constructed. So there are a few plays in the broader markets that are doing particularly well, that did well yesterday, that continue to do well today as well. And one of them, of course, is gaining quite substantially in trade today. It's up over 16%. That was NBCC. It's gaining ground in trade today as well. A few of the plays in the renewable side, Suzlon, for example, is at an upper circuit. Wari is another stock that is doing particularly well today. It is also at upper circuit. And in fact, the play on rooftop solar perhaps also is something to talk about in trade. But really, the big story is that the Nifty 50 has hit a fresh all-time high in trade today. And Neeraj is here to talk about some of the reasons why, Neeraj.
No, I mean, Alex, it'll be lovely for both of us to maybe get some voices as well. But here's the thought that when we spoke to a clutch of market experts yesterday, both on record and off record, the feeling seemed to be that the markets took some time to digest the fact that, yes, it was a bond budget, yes, but it has significant implications over the slightly medium term to long term for the equity markets as well. Neelkan Mishra came in today and mentioned that there's a very high probability that the rating agencies might take a relook. Now, imagine if you are looking at a country which is growing at a great pace, showing the reduction in fiscal deficit, all of which was discovered, but also seeing action both from global funds who would see India as a believable, credible story on the consolidation side and not overspending, and if there is some rating activity happening. I think there's a confluence of these things, plus the fact that the global markets, frankly, are doing okay. Had the Dow and the S&P not been doing so well, we may not be having this conversation. But I think this move, Alex, to my mind, smacks beyond what's just happened in the Dow, to be very honest, is beyond it. And as you can see, as you highlighted, Alex, in the Nifty contributors list as well, it's not a one-trick pony today.
Yes.
There's a clutch of movers which are happening, and the broader markets too are doing well. So there is a bit of an all-round participation, which is why we are at record highs.
To the point that you were making about additional capital being set aside to invest in India, there was a report by Bloomberg earlier today about Bain Capital setting aside $7 billion to invest over the next few years, and also ramping up its private equity space. So not just in the primary markets, I would think, or rather in the secondary markets, but also in the private equity space, which has seen a lull for a while. Maybe that picks up again, Neeraj.
Yes, and you know, I mean, so two concerns about what's happening because of the valuations. There are 2 points that I would like to make here, Alec. One, Mark Mathews this morning came up and he gave a very nice comment. He said, India is the Patek Philippe with swatches all round.
Wow.
And would people want to go for a Patek Philippe, or would they want to go for swatches? That's a call that, Neeraj, I asked you to make. Right? Simple. Everybody would probably go for a Patek Philippe. So that's part one. Part two, yesterday, We attended a small event, post-market hours, off-record, off-air, wherein the A-listers of Dalal Street were present. Alex, I can tell you unanimously, in a 100-people room, except 2 people, there's not a single person, or maybe let's say 5 people, or let me give a benefit around 10 people would have been negative. Everybody else is constructive on the markets despite the valuations from now until at least the election results or the budget. Then what happens to the valuations at that point of time, people will revisit then. But I think the call is clear that you have to bet on India. Dips are getting bought into. Yes, there could be a correction, but for now, people are not willing to make large sales.
Absolutely, and we're at very close to that 22,100 mark. Of course, just a tad bit of ground being given up in the last few minutes of trade. But Gurmeet Chadda is joining in to talk about what we were just talking about. And Gurmeet, I'm going to toss it to you as well. Seemingly, it's taken just a little time for the market to digest some of what the finance minister was talking about in the interim budget. It has been called a bond market budget, but seemingly the equity market's also cheering it.
Absolutely, and I think a lot of people don't realize that those two things are very, very interrelated. Now, one event which hasn't been really discussed in depth, in my view, has been our bond inclusion in the global bond index. So starting June in JP Morgan and in September in the Bloomberg Barclays Index in a staggered manner. So for this to happen, the fiscal consolidation was very, very important. And I've been saying this for a while. I think a rating upgrade is due. So what government has done with this budget is, despite being an election year, they've balanced it out. It's not too high on populism. They've surprised the street on fiscal consolidation, giving 5.8 this year, 5.1 next year, and reiterating 4.5. Speaks of the confidence they have in continuity in terms of the regime. Thirdly, the market at some point of time will price in a rating hike. It's due. I think we deserve a rating upgrade the way we have performed in a very, very volatile world. Thirdly, I think one important thing is the market is not really completely FI driven. I mean, last 8 days they have withdrawn probably 39,000 crores in cash. So this also tells you that the positioning is not that heavy. That it's heavy. You get worried when everybody is all gung-ho, right? So this is, in my view, these are the 3 points. So I think the market will probably at some point of time start discounting rate cuts also. Coming maybe in H2, maybe a little earlier than H2 if Fed is supportive. So I think multiple things playing out, and I think banks will be in focus. Because they will make treasury gains, which will, and banks are, financials are more than 1/3 in weightage, so they've not done as well as the broader market. So I think some of that also will probably start playing out with the banks and financials also joining.
Yeah, I mean, in just one day, right? You're talking about significant treasury gains. Look at the yield on the 10-year benchmark. It's moved from 7.2% to 7% very, very quickly. Gurmeet, you spoke about banks. Private banks have not participated. Do you think they now will start participating in the move up?
And sorry, if I may add, just add addition to that question, Gurmeet, Neeraj here. PSU banks, by virtue of these, one, the bond price movements, and two, the belief that what might happen to ratings. So both Alex's question on private banks, my question on PSU banks.
I think both, Neeraj. Private banks, because when have you seen HDFC Axis at almost 2 book value, core book value on FY25? If you see SBI, Bank of Baroda, the larger PSUs, almost 1 book value. Bank of Baroda is below book value. Look at the earning multiple, right? HDFC 15 times, SBI 9 times, Bank of Baroda probably 7 times, right? And the concern has been NIMs and cost of deposits and all that. Now you get a near-term support. Treasury gains are not structural; they will be more for 1 quarter, 2 quarter. You get a near-term support, and then if you start factoring in rate cuts, that NIM also probably will start bottoming out. And so I think financials and Neeraj, who would have thought PSUs and defense would be the best performing space in 22, right? So you got to be a little contrarian in the market. Think what is structurally good, but probably is not done well temporarily.
What is that, Gurmeet? What is that currently?
I think banks clearly, in my view, are in the sweet spot. Financials, both financial banks as well as the capital market participants, the depositories, the AMCs, the RT agents. I think in a very, very sweet spot. Consolidated also in a while. And I think some of the spaces where chemicals, a lot of the problems in some of these is cyclical and temporary. I think if you start differentiating that, look at, for example, Infosys people were so negative on Infosys at 1200, 1300.
I was going to ask you, Gurmeet, on IT, because when we're talking about domestic factors, of course, the focus is on the domestic play because we're talking after the interim budget. But seemingly, we're also talking about a soft landing in the US, and a lot of people are sanguine on the US economy as well. Of course, we'll see the jobs number later today. But having said that, the IT pack, do you think that that's one to bet on, considering that you're saying that you should be contrarian?
So I think it's already done up. I mean,
yeah,
I think large cap IT is 20% up probably in last 3 months, right? If you look at the index. So I think IT, I'll be probably more on start being a little contrarian on banks, some bit on chemicals. So there are a lot of good names at very good valuations. I think there's a bottoming out happening there. Some bit of pharma also. I think, and if you look at pharma, for example, last 15 years it has outperformed Nifty by 1.5%, despite whatever the lull period in between. And still the representation is 5% at Nifty level and 5% at BSE 500 level. So I think you've got to be a little more contrarian now, get a little overweight, maybe on banks, chemicals, pharma a little bit, IT selectively, and keep playing, the regular growth stories also. So I think it's a blend of growth and value, I think, which can deliver good returns even this year.
A quick answer. A few days back, or rather a few weeks back, we'd spoken to you and you said that perhaps a move towards large cap. If I remember correctly, Gurmeet, I don't want to put words in your mouth, but if I remember correctly, you had said that moving towards large caps makes sense. Does that hold true right now as well?
Yeah, relatively. I'm not saying all mid and small caps are expensive because, the index would probably only capture the top 500 stocks largely, maybe a little more than that, and universe is much bigger. There are a lot of good opportunities, in 2,000, 4,000, 5,000 crore market cap space. But broadly, yes. So also look at this way. Last 1 year return, Nifty is about 19, small cap is 50%, mid cap index last 1 year is 45%. So, and if you take a 10-year average and rolling 10-year, the difference between large, mid, and small is between 1 to 2%. So some bit of, catching up will happen. So either there will be a correction in small mid cap little bit, which I think some pocket should happen, and there will be some catch up in large cap. So it will probably be a combination of both.
Fantastic. Gurmeet, thanks so much for joining in for that quick view on the markets. Let's also listen in to Vijay Kedia. He had a conversation with my colleague Tamanna Inamdar earlier, and he said that he believes that all sectors are gaining steam. Listen in to what he had to say.
इंडिया जो है चाइना के मॉडल को फॉलो कर रही है, ऐसा मेरे को लग रहा है, क्योंकि 1980 में हम और चाइना एक ही जगह थे और उसके बाद चाइना हमसे 6 गुना बड़ी इकोनॉमी हो गई, 5 गुना 6 गुना हमसे बड़ी इकोनॉमी हो गई पिछले 30 सालों के अंदर में। तो अच्छा है कि उसने ऐसा अच्छा क्या किया, हम सभी से सीखे हम लोग। तो चाइना में जो विकास हुआ है उसके अंदर में सबसे बड़ा योगदान रहा है ऑफकोर्स हेल्थ का और समझिए एजुकेशन का, और लेकिन जो दिखता है वो विकास उसको है इंफ्रास्ट्रक्चर का। तो मेरे को लगता है इंफ्रास्ट्रक्चर के गवर्नमेंट भी ऐसा ही सोच रही है, इसी बोलकर सब पावर के अंदर में एक्सपेंशन हो रहा है, एयरपोर्ट पे हो रहा है, पोर्ट्स पे हो रहा है, सड़कों में हो रहा है, रेलवे में हो रहा है, डिफेंस में हो रहा है। और तो ये सारे सेक्टर जो हैं जिन इनकी चीज़ को कैटर करते हैं, गवर्नमेंट ने जो नाम लिए आज, जो एफएम ने जो नाम भी लिए हैं, तो ये सारे सेक्टर ही अच्छे करने वाले हैं, इंक्लूडिंग जो आपने पहले बताया पीएसयूज बैंक्स वगैरह वो सस्ते हैं, वो भी अच्छा करेंगे। तो ये मोर और लेस सभी सेक्टर अच्छा करेंगे। टाइमिंग की बात अलग हो सकती है, पहले गिर भी सकते हैं, टाइम वाइज करेक्शन भी आ सकता है, प्राइस वाइज करेक्शन भी आ सकता है, उसके लिए तैयार रहिए।
Right, so some interesting perspectives, and if you pull up the intraday chart of the Nifty 50, you will notice that it is currently trading at just under that 22,100 mark. Of course, we are seeing significant gains still at this juncture. A few pockets of significant strength. Nifty IT, for example, doing particularly well, as well as the PSU banking pack doing incredibly well. But a couple of relative underperformers, I say relative from that perspective, but the auto pack as a whole not doing too much in trade. Of course, we'll continue this conversation going forward as well. I'd request you to stay tuned. It's an exciting time to be tracking and to be watching the Indian equity markets. Do stay tuned, of course, for an exclusive conversation that NDTV Profit has, or rather the NDTV group has, with the finance minister to break down what she laid out as the roadmap for FY25 and also the path ahead for her government and for the administration. Do stay tuned. As I said, lots more coming up over the course of the day, and this is NDTV Profit.